Okay, so let's get started. So today is our third session. So in today's session, what do we intend to cover? Let's look at what we have in store for today. So let's start with a quick recap of what we were looking at in the last session. So in our last session, we did look at threats to the auditor's independence. So we said there are situations that as an auditor, if you're not serious about, if you're not careful about, these can impair your judgment. As an auditor, you're likely going to be influenced. You will not say things as they are. It could be because you're afraid of losing your friend. So the self-interest threat. So if there's self-interest threat, you are afraid of saying the truth because you don't want to lose the benefits. So it could be someone close to you, and if you are to say the truth, the relationship that you have with them, you lose that relationship, or it could be you've been offered some benefits, and once you accept those benefits, you're afraid if you say the truth, the person might maybe take back their benefits. So self-interest threat, we did look at self-interest threat where the auditor is failing or their judgment has been impaired because of the benefits that they've been offered by the client. So if you're given a question, it's very important to identify which threat is it. So with self-interest threat, we did also talk about familiarity threat. Familiarity threat, this is a case where you're now too familiar with the client, they are now your friend, they are now your family. So it becomes difficult for me to then say they're stealing money from the company. It becomes then difficult for me to say things that might end up putting their lives in danger because I want to protect the relationship that I have with them. So that's familiarity threat. We did talk about that in the last session. Then besides familiarity threat, we also did mention intimidation threat, fear. You can't say the truth because of fear. You are under duress. You are being put under fear, under duress to an extent that you can not speak out the truth as an auditor. So that's intimidation threat. There's conditions that can put you as an auditor under intimidation threat. Then, besides the intimidation threat, we also did talk about advocacy threat. You're acting as a lawyer for your client. You're representing your client. It means you are marketing for your client. So as an auditor, you shouldn't be taking the side of your client because it can be difficult later on to then implicate that client into crimes when you were the one that was representing them. So advocacy, you are representing the client. You're negotiating on behalf of the client. You are marketing the client's services. So you're negotiating or you have been sent by the client to represent them in any sort. That one it can cause advocacy threat. Then we did also talk about self-review, where you are being required as an auditor to check something that you yourself prepared. So there are dangers in those situations that you need to make sure you put measures as an auditor to avoid. So once you detect that there is a threat, you need to come up with safeguards. You need to come up with ways to make sure that threat is reduced to acceptable levels. So where you can deny, for example, if you've been offered a gift and you feel like this gift is so that it can influence my opinion. As an auditor that is guided by ethics, you're supposed to politely decline those gifts. So you shouldn't put yourself deliberately in situations where you are going to be faced with threats to the auditor's independence. Then we said if a question is to do with a threat, the first thing we need to do is identify the threat and concern. So identify which threat is it that you're dealing with. So if you are saying it's a threat, you need to be able to tell us why are you saying this is a threat. Being given maybe being given an interest-free loan is a threat, but why? We need to explain the why part. Why are you saying it's a threat? So what is it capable of causing? If the auditors are to be given interest-free loans, what is it capable of causing if you review your own work? So you need to tell us, why is it a threat? Then you come up with an appropriate safeguard. A safeguard is a way you've designed that to reduce the threat to acceptable levels. So a safeguard reduces the threat to acceptable levels. It reduces the impact of that threat. So if we implement appropriate safeguard, the threat might not have a huge or significant impact on the auditor's judgment. So we did talk about that in the last session. Now let's get moving. So there are a number of practice questions. Although some of these are old, you can also check on the practice platform the questions you can also use for these particular areas. So let's move on. In today's session, we want to look at accepting a new audit client. So we have a client who we have been given an offer, we have received an offer, and we have to determine, should we accept or should we reject this offer? That's what we want to look at. So there are conditions we need to consider. It's not just an issue of, oh, it's a client, let's go for this one. No, there are factors we need to consider before we can accept this offer. So firstly, let's look at different ways that we can, the different ways in which we can get a client. So an audit client, we can get the new contract via direct client request. So a client can come to them and they ask you to carry out an audit for them. So direct client request. I think that was the other place. It's supposed to be moved forward. Just a moment. Okay, let's proceed. So I was saying, we want to look at the ways in which we can get a new client. So we can get a client through direct client request. So the client can come to you, they tell you, I need your audit services. So that one is direct client request. So your client is the one that it comes to you in request of the service. Then we can also advertise, then get clients. So if we get clients via advertising, there's the clients that can come via our adverts. They have been interested via our adverts, or tendering. So tendering, this is where we can bid with other firms and we win the contract. So these are some of the ways we can, how we can get a new audit client. But if someone comes to you and say they want your audit services, it's not a matter of you just accepting to get into that engagement. There are factors you need to put in place. There are factors you need to consider before you can accept that engagement. So someone comes to you, they want your services, they want your audit services. There are factors you need to put into consideration. So number one, the key issue is accept an audit provided that you are able to handle the risk associated. So auditors must accept engagements with the risk that they can handle. So it's not necessarily every audit. It's not necessarily every audit that is good. We need to accept an audit with a risk that we can handle. So what do I mean by accepting an audit with a risk that I can handle? The fact that I have audited schools doesn't mean I'm able to so the fact that I have audited schools doesn't mean that I'm also able to audit banks. The fact that I've been an auditor for schools doesn't mean I'm also going to audit mines. So you accept an audit that you know the risk associated with that nature of business. You are able to handle. Being able to handle the risk means what? Being able to handle the risk means you have the resources needed. It means you have the skills needed. So please take note of this. You accept an audit provided that the risk associated you can handle. So you consider the type of risk associated. Do you have skills? Do you have, so which are the factors you need to consider? Let's have a breakdown of these factors. So let's go through those factors that you need to consider before accepting an engagement. So the first factor you need to consider before accepting an engagement is independence. So independence, that's when we're talking about the ethics, the factors that can affect your independence. Are there any factors that can affect your independence as an auditor? Do you have any factors that can cause self-interest? Are there any factors that can, so you assess that before you accept the engagement. Consider the presence of these factors. And if these factors are present, the next thing is to consider, can I mitigate this to acceptable levels? Yes, there's a threat of independence. There is a threat of self-review, but can I mitigate this to acceptable levels? So there can be ways to mitigate these threats. Like we said, if maybe it's a junior that was working for this firm that we are going to audit, we can still go with them, but we need to supervise the work that they were doing. But if it was someone of an influential position, this person was actually a director in the firm that is requested that we do an audit for them. So if this person was a director, our audit partner, in fact, was a director in that firm, we can't have the audit team going to audit such kind of a client because the threat is significant. You were a director in that company, and now you want to go and audit that company. So it means if the year has not yet elapsed, the strategies that you're going to audit, it's you that is maybe designed those strategies. You had authorization over the entries that were taking place. So it means you will not be able to say the truth if you see certain things not being done the proper way, because you know you contributed into the system that are being used. So we need to consider if there are threats to independence, can we mitigate them? And how can we mitigate? So if we can't mitigate, if that's the only audit partner that we have, and they were someone who was working for the client, or they have their spouse working for the client as a director, so we can't go ahead with the audit if we don't have anyone else whom we can use as a replacement. So consider before accepting the engagement, are we going to be independent? If you go ahead, are we going to be independent? Then besides that, let's also consider the reputation of the client. So if we see that, okay, yes, the independence is all right, we are independent. Let's consider the reputation of the client. Let's consider the reputation of the client, because the reputation of the client will determine the team of auditors that we need. So if this client is known for shady deals, we can't go with the juniors. We need to consider, do we have the team with the right skills? Because if the client is a disastrous client, if we go with a team that is less competent, if we go with juniors, we might run the risk of failing to pick all the issues in that client. So consider the reputation of the client. Are they people that we can work with? The other auditors, the previous year auditors, what do they have to say about this client? Do they encourage us to go ahead with the audit? If not, why? So let's consider the reputation of the client. Besides the reputation of the client, we also need to consider the preconditions of an audit. So before we carry out an audit, let's consider the preconditions of an audit. The preconditions, these are conditions that must be there, like what? Under the preconditions of an audit, we have the first one is that the auditors must accept their responsibility to prepare the financial statements. We can't audit if they have not. We'll talk about these preconditions later on, but the auditors must accept, not the auditors, the managers must accept their responsibility to prepare the financial statements. It's not the auditor's responsibility. The auditor is there to give an opinion, but it is the managers that are supposed to prepare the financial statement. So before we continue with the audit, they must accept their responsibility to prepare the financial statements. So the first preconditions, first precondition is that the auditors must, the management, sorry, I don't know why I keep saying on, the managers must accept their responsibility, that we understand it's our responsibility to prepare the financial statements. It's not the responsibility of the auditor. Then, besides that, another issue is the accounts must have been prepared using acceptable accounting framework. We can't audit and we come to your firm to carry out the audit, then we ask you, which accounting standards did you use? Then you say, we're just recording anyhow. There wasn't any standard we followed. Then it will be a disaster. How then do you verify such a case where all the transactions were just being recorded, not following any rule, not following any standard? So for us to audit, there must be an applicable, there must be a recognizable accounting framework that they were using. So at least there must be standards that they were following. So if they were not using acceptable accounting principles, it becomes very difficult for us to audit because it means quite a lot of areas might have misstatements. So at least when we come to audit, there must be standards you have been following that at least we can also verify. But you can't verify when you have not been doing, you have not been following anything. So if we are to say they are right or wrong, they are right based on what? If the client was not following any standard. Then also we need professional clearance. Professional clearance, we need to communicate with the outgoing auditor and get an understanding from them why they left the company, and also so that they can tell us the areas that are potentially the risky areas. Of course, they will have their working papers. They can give us their working papers so that we can check where errors and fraud, the areas that could be highly misstated. So the professional clearance, that's we need to communicate with the outgoing auditors. So we seek permission from this client to communicate with the outgoing auditors. They should give us that clearance. They should give us that go ahead to communicate with the outgoing auditors. If they refuse, it's a justifiable reason to also decline the audit. Why don't you want us to communicate with the outgoing auditors? Because what can happen is maybe the outgoing auditors, they discovered something that was hidden. They discovered issues. So after they had discovered issues, they then after they discovered issues, then the client was not happy and decided to change the auditors. So we need to communicate with the outgoing auditors so that they tell us everything about the client. Then also, before we go ahead with the audit, like when we're doing the ethics, the threats to the auditor's independence, we did mention that we can't go ahead with the audit if they have an amount that they are owing us. We need to agree on how that is going to be paid before we go ahead with audit. So let's agree on how much will be paid. We don't want any contingent fees that will be paid at the end of the audit. So let's have the basis of fee payment. Let's agree on how the fees will be computed, how we are going to get paid in the end. So there is need to consider how the audit fees is going to be paid. So we need to agree on that before we accept the audit engagement. How much is going to be our fees? We are the ones that give the clients the fees. So they should accept the fees. Then if they have accepted, we can go ahead. So we don't go ahead before we have agreed on the fees. Another issue to consider is the availability of resources. Sometimes, yes, the deal could be good. It may be lucrative. It might promise us large sums of money, but as auditors who are guided by ethics, we need to consider professional competence. Do we have the competence required? We don't accept the engagement because we want money. We need to consider, do we have the resources needed? So to conduct this audit, there are resources needed. Do we have the resources? So if we don't, then it's not ideal for us to go ahead with the audit. So we need to consider, do we have the sufficient resources needed? Then also the type of risk. I think I've mentioned this earlier on, that the fact that we have been auditing schools doesn't necessarily mean we can audit all schools or all companies. You might be, your skills that you have, the resources you might have, might be maybe compatible with the risk associated with schools, because every industry has its own risks. So you need to consider, do you have resources that can be able to cater for the type of risk? And also, how familiar are you with the nature of risk associated with that type of a business? So consider the type of risk we are likely to face when you're conducting the audit for this client. So we need to consider the type of risk. Besides that, we also need to consider management integrity. Remember, as we are conducting the audit, we need to get evidence. We need to get evidence. So as we are getting evidence, certain evidence, we have to get it from the management. So like if the managers make estimations, the only way we can get that evidence maybe is to discuss with the management. We hear from them. The basis for the estimations that they make. So this means that we need to first of all consider, are they people that are trustworthy? Are they people that we can rely on the information that they're giving us? So we need to consider the management integrity. Can they be trusted? Can the management be trusted? Now, let's move on. So there are cases where it's a new client. We have to consider whether we should accept this client or not. Or it can be an existing client already. So if it is an existing client, our main issue is to consider, should we continue with this client or not? So sometimes we might, last year we did carry out the audit for them, but it doesn't automatically mean this year we should continue. So we might need to first of all consider, is it ideal to continue with the audit. So once the audit is complete, the audit firm must revisit the acceptance consideration. Let's revisit the terms or the basis of our acceptance for last time. So once we're done with the audit, let's revisit our acceptance conditions and check if there are any adjustments that needs to be done, verify whether it's ideal that we should continue with the audit, because the organization can grow. Yes, we accepted the audit last year because we had the resources sufficient, but now the organization is grown. Maybe the organization we accepted last time, but there were issues we were not aware of. We got to know of them during the audit. So this year we might consider not getting into the engagement. So we need to consider first the terms and conditions that we agreed. Is there any need for an adjustment? If there is no need for adjustment, and the client is willing that we should go ahead, can go ahead. But if there are significant issues which took place during the year, such as maybe there were significant disagreements, we had agreed on the fees, but halfway the line, they started changing things. We can decide, well, the next time we can't deal with these people. So significant disagreements with management or doubts over management's integrity, the auditor can consider resigning. So the auditor can consider, no, I can't keep working for this firm. There aren't people that are trustworthy. So the preconditions of an audit, I think I've mentioned this. So these are the preconditions of an audit. So before we accept the engagement, there is need to determine whether the reporting framework that is being used is appropriate. So we need to consider whether the financial reporting framework to be applied in the preparation of the financial statements is acceptable. So did they use an acceptable reporting framework? And also have the management acknowledged their responsibility. I did mention it's not the responsibility of the auditor to prepare the financial statement. It is the responsibility of management. So the managers should accept their responsibility. They should acknowledge their responsibility that in the event that we find errors, in the event that we find fraud, this is not the fault of the auditors. It is our fault. It is our responsibility. Then let's move on. So we consider those terms. We say there are factors we need to consider. Yes, we go through those factors. If we are satisfied, if all the factors are present, if you are satisfied and all the factors are present, the next thing we need to agree those terms down. We need to draft down those terms in what we call an engagement letter. So the engagement letter specifies the nature of the contract. So the audit firm drafts the engagement letter, which is going to act as a contract between the firm and you, the client. So they are going to draft the engagement letter, and the engagement letter is going to specify a number of issues. We're going to have a list down of the issues that we find in an engagement letter. But the engagement letter is written by the auditors. And after the auditors have written the engagement letter, it is then given to the client. Then the client management is supposed to sign this engagement letter. So once the client's management has signed the engagement letter, it shows that they have consented to the terms and conditions. They have agreed to the terms and conditions which are in the engagement letter. So the letter, once signed, it becomes a contract between now the audit. It becomes a contract between the audit That's the audit firm and the client. So that's the engagement letter. So in the engagement letter, it is mainly to avoid disagreements later. So later, someone might say, no, we did not agree on this. These people are lying. That's not what we agreed. So the purpose of the engagement letter is to ensure there is clarity, to ensure that we do not have a case where someone is going to later on say, what you are saying, we did not agree on that. So in the engagement letter, we are likely to find the following. So in the engagement letter, we can get number one, the objective of the audit. Remember the objective of an audit. The audit is not to give an absolute assurance. So an auditor give a reasonable assurance. So no one can give 100% assurance because they audit. There are risks that can cause an audit to be less 100% efficient. Let's think of sampling risk, for example. So an auditor gives a reasonable assurance, not an absolute assurance. So we highlight that this audit is to provide a reasonable, not absolute assurance. And also it should indicate that we can have what we call a compilation arrangement. It could be an agreed upon arrangement. It could be, so it will highlight what form of engagement is this. So what is the objective? Is it to give a limited assurance? Is it to give a reasonable assurance? So what is the objective of the audit? Then if you are a company with different branches, you might need to know the scope of the audit. Are we auditing all branches? What is the scope of the audit? To what extent is our audit going to cover? What's our coverage for the audit? So the scope of the audit is looking at the extent to which the audit is going to cover. So the engagement letter will tell us, are you going to audit all the branches? Are you going to be auditing some of the branches? So that's the scope of the audit. Where is it going to cover? Then besides that, the engagement letter also tells us the applicable financial reporting standards. So which standards are we going to use if we are conducting the audit? Are we going to be using the local standards? Are we going to be using the international accounting standards? So we highlight the standards applicable when we are conducting the audit. So that should be highlighted. The standards applicable. So the applicable standards. Now let's move on. Again, we estimate, when do we think will be done? So we highlight the expected completion period. So how long do we think our engagement is going to last? Do you think maybe in the 3 months will be done, or we need more time? So there is need for estimation of the time, the duration of the audit. So that again is mentioned. So as an auditor, in fact, you shouldn't accept an audit where you're put under pressure. It's again another threat or a risk. Why should you audit when you're put under pressure? Because they might want to hide certain things. So if they say, we want you to conduct the audit and we are supposed to be done in 4 weeks, why is it so? Why are they giving you time pressure? So we need to highlight the expected period we are going to take to conduct the audit. So we shouldn't be put under time pressure to finish. Then also, besides that, the form in which the results will be communicated. How is the report going to be? How are the results going to be communicated? So are we going to, is it a compilation engagement where we give you the results, you put opinion on, an agreed upon procedure where you put your opinion on, or we are supposed to issue an audit report. So how are the results going to be communicated? That is highlighted. Then the basis on which the audit fees is to be computed. So again, in an engagement letter, we need to highlight how the audit fees will be calculated. So audit fees, we don't decide how the fees will be calculated when we are done with the audit, but it should be highlighted right from the contract, from the engagement letter. It should be clear how the audit fees will be paid, so that later on we don't end up having quarrels, we don't end up having problems where someone is now, where they are now changes. So it should be included in the engagement letter. Then, so we are supposed to have the basis of whether it's going to be paid based on the hours, paid based on the locations, based on the, of course, it cannot be paid based on performance. So we can't say we'll pay based on the, not the, it can't be paid based on opinion. So you can't say if they say a favorable opinion, then you get more paid, you get paid more. No. So the basis of the fees must be clearly highlighted. Then the permission to contact the outgoing auditor. So in the engagement letter, that's where we have the request to communicate with the outgoing auditor. We request the firm, can we communicate with the outgoing auditors? We want to understand the reason behind why they left the company. So we request for permission to contact the outgoing auditors so that we can tell whether they left on good, in a good note, or maybe there are issues that caused them to leave that we might also need to be aware of. So we need the permission to contact the outgoing auditor. Then also there's the issue of management responsibility. We highlight, okay, these are the responsibilities of managers, and these are responsibilities of auditors. Let's be clear on this one. This is not my duty as an auditor. This is your duty as a manager. It's not my duty to prepare the accounts. So that will be highlighted in the engagement letter, the duties of the manager or the responsibilities of management. And also an expression of inherent risk of audit. The inherent risk of audit. The inherent risk of audit. I said that no audit is 100% accurate. So why? Is because we are carrying out an audit. We use samples. We don't check everything. So an audit is based on samples. So the inherent risk of audit says that the inherent risk of audit says no audit is 100% accurate. So we do need to give room. So for audit, we do need to give room for errors. Why? Because they've used samples. Why? Because of besides using samples, we can also have inherent risks that are associated with the nature of the business. So there are certain factors that can make it difficult for us to give accurate results. Then let's move on. So in some cases, we might need to revise the engagement letter. So we draft the engagement letter, then later on we can say there is need for a revision of the engagement letter. So what can cause us to revise the engagement letter? So the revision to the engagement letter can be as a result of, so the revision of the engagement letter can be as a result of, number one, to clarify misunderstandings. We realized later that what we had agreed, there were misunderstandings. So we might need to revisit the engagement letter and make some changes. Why? Because certain areas were not clear. What we thought and what the management thought was different. Once they have signed, of course, it's now a contract. But where we feel the terms of the contract were not clear, we can then agree and make amendments to the engagement letter. Then any revised terms. So maybe they wanted us to audit only one branch, but they were so happy with how we were performing, and they actually decided to add on more work for us. So if there is a change in the terms of the audit, that can call for a revision of the original engagement letter. So changes in the terms of the engagement, and also significant change of ownership or senior management. So the engagement letter is going to be signed by the seniors of the organization. So if the seniors that signed the engagement letter leave the company, it means the new seniors they have to sign. We have to revisit the engagement letter. The new seniors have to sign. So if there is change in the senior management level, we might need a revision of the engagement letter to take into account the changes in those senior positions. So the engagement letter can be revised to take into account the changes in the senior positions. Then also, the engagement letter can be changed if the size, so the organization grew significantly. So when we entered into the agreement, we never thought that the organization is going to increase in size as it is now. So if the organization increases in size, it means more work for us as auditors. We might need an adjustment or a revision to the engagement letter. We might need a revision to the engagement letter. Okay, let's move on. Then change in legal regulations. So what the law allowed us to do as auditors has changed. So that change in the laws and regulations, that change in what the law requires us to do, can require also that we adjust the engagement letter so that it can be in line with the new laws. So maybe they can be a statutory limit on how much we can charge. So we might adjust so that we comply with the laws and regulations. Then also, if there are changes in standards in the industry, so changes in reporting standards, they can also call for an adjustment in the revision, in the engagement letter. So any adjustments that can take place, can affect the terms of the engagement, because we made the terms based on what was current. So if we change the reporting standard, we change the laws, we change the size, we change our ownership, those changes also call for a change in the engagement. So the managers are supposed to sign the engagement letter. Once the management has signed the engagement letter, it becomes a contract. Once the management is signed, it means they've agreed to what the auditors have said. So the auditors have written the engagement letter, and the auditors then sign. So them signing is an agreement that is an indication that they agree to the terms and conditions. So it's very crucial that we know about the engagement letter. So before before we accept the client, let's first of all consider the conditions, whether the conditions are available. If all the conditions are available that we need, then the next thing is to draft the letter. We draft the letter, then we submit this letter to, we draft the letter, then we submit this letter to the client. The client has to sign. Their signing of the letter is a confirmation that they've agreed to the terms and conditions. So now, today Monterey around one exams were that one day. So I have a lot of pressure with those writing from Monday. So allow me to assist those writing on Monday, but tomorrow we're going to have our financial reporting session. So for today, let's end here. Then tomorrow the session is on.
All right, that's fine, sir. So are you able to share the one that you were sharing?
Yes, I will share the link as well as so if you want the video, I'll share the link in the group.
No, not the video, maybe the module, the lecture 3.
Or the PDF. Okay, yes,
Yes.
I'll send it in the group as well.
All right, thank you, sir.
Okay.